Syft has a great forecasting tool, but it's always based on the information you have for that entity. So what happens if you want to create a forecast for a specific project or a potential side business that you're considering? And you don't want it to include all the information for the rest of your business, but rather you just want to create a project forecast or micro forecast. And that's what we're going to look at in this video. So to do that, you need to create a new journal entity. So I'm going to add an entity and we're going to select a journal entity. We're going to name it project forecast example. And we're going to select its country and the currency, and you can obviously change your year end. We're then going to click next. And now we've created this new entity. We now need to go and add accounts to this journal entity. And so you need to go and add all the accounts that you're planning on using. So say, for example, we're considering buying a new building and renting that out. We need to go and add all the accounts that would be relevant for that project. So I'm going to say building. I'm probably going to have a loan to pay for that building. I'm going to have a bank account that will receive any rental income. So I also need rental income. We'll probably have depreciation and accumulated depreciation as well. And then we need to go and select which account classification they each have. So let's just go select all those. And the category, non-current asset, non-current liability, current asset, depreciation, and then accumulated depreciation, which would be a non-current asset. And it would be the same as building. Okay, so then we choose a chart of accounts. So for building, it would be property, plant, and equipment. For the loan, long-term debt. For the bank, cash equivalents, rental income, revenue, if that's the main purpose. Otherwise, it might be other income. Got depreciation and accumulated depreciation. Now, obviously, the accounts that you need to add will be very dependent on the type of project that you are creating and doing a forecast for. And very importantly, please make sure that you've added all the accounts that you could possibly need before you go and create the forecast. Any account created after you've created the forecast won't appear in that forecast. So you'll have to go and create an account that you've forgotten and then go create a new forecast. So please, please, please double check that you have all the accounts that you would need. We can then go and click create and click yes. And now we've created accounts. We can see here that all of the accounts that we inputted have now been created, and they'll remain unlocked until we post journals to those accounts. So until we post journals, we can go and edit or delete them. In order for Syft to register this as a company and therefore give us that forecasting option, we need to go and post a journal to this entity. So you'll note that none of the normal sidebar headings appear at this stage. So we need to go and post a journal. So if we go to last journal, it'll take us to the view where we can go and add a journal. Now, we're only using this entity for a forecast. So it really doesn't matter what journal you post. I'm just going to go bank and building, and I'm just going to say test, and put 1 and 1. You'll have to give it a date, otherwise it won't let you continue, and then you can click post. And now that you've created some financial information on Syft will give you all those sidebar headings that we're used to. Now, obviously, we don't actually want a transaction of $1 to bank and building, but it doesn't matter because we're not going to use the historical information when we're building out this project forecast. So you can already post this. It doesn't matter. It's not going to impact anything going forward. So now we've created this entity in which we're going to do this project forecast. We can go to forecast, four-way forecast, and we can go and add a forecast. So I'm going to call this project forecast, and I'm going to write a description. So considering purchasing a building, we'll have to select the start and the end date, the interval, and whether we want it to roll on and off. So all of those are normal selections for every forecast. We're then going to select what type of forecast we want to do. And I'd suggest that you use a zero-based forecast because this project is new. It's something that you're considering doing in the future. So there's no historical information to base it off. You then need to select the data from which you're going to forecast, but as it's zero-based, it doesn't matter. And then you can click create. And now Syft will create this project forecast for you. So you'll see it's been created and it will take you to it. And you'll note that there's nothing in this forecast, and that's because it's zero-based. But you will be able to go and add quick adjustments or advanced adjustments for any of the accounts that you've previously created. So you'll note we have rental income, income tax, and depreciation. But please remember, as I mentioned beforehand, if you go to layout and then accounts and create a new account, that won't appear on this forecast. So only accounts that you've created before creating the forecast will appear here. Okay, so let's start by purchasing this building. So we're going to say what happens if we purchase this building. The beginning of the forecast, it's going to be once off and it will be a new value. So let's make it 1.5 million. And you'll see we've purchased this building. We can see that by the adjustment. And currently the money's coming out of our bank. But now we want to actually reflect that we got a loan for it. So I'm going to select loan. Again, it's going to happen immediately. We want it to be once off. And we're going to put 1.5 million. Okay, so you'll see that our bank is no longer impacted, and rather our building has increased and our loan has increased. We then can go and reflect that we're going to get some rental income for this. So we're going to go and add a quick adjustment to rental income. We're going to start today. We'll continue till the end of the forecast. We're going to include a new value, and let's say we get $25,000 of rent a month. We click save and you'll see our rental income has reflected, and the automatic contra to that, as we learned in the basics course, is cash and cash equivalent. So we'll see that Syft has automatically updated that. Our cash flow and our KPIs will update accordingly. And now we've started to build out this project forecast. You should then go and consider things like depreciation. So we could then go and add an advanced adjustment. We could call it depreciation on building, and we could get it to continue till the end of the period. It would be every month, but we'd probably need to use a formula for this, and perhaps it would be the building. So we'd go select a fixed asset, building, and it would be the current building, so the building value, and we would divide it by 20 times 12 because we want the monthly depreciation, and we click save, and now you'll see depreciation has appeared. So we've now recorded our depreciation, but you'd have to go and record the other side of that adjustment in the form of accumulated depreciation. You could then go and consider additional things relating to this project, like the interest that you might have to pay on this loan and the repayment terms. But those are all things we'll look at under separate videos. For now, I just want you to see that it's possible to create a forecast for a specific project.